Smart Finance Moves. Insight from a CS and IP. Episode 1. What are mutual funds? Understanding the basics. Introduction. Welcome to the first episode of Mastering Mutual Funds. Today we're going to demystify mutual funds, explaining what they are and exploring their different categories. This knowledge sets the foundation for making informed investment decisions. By the end of this episode, viewers will have a comprehensive understanding of what mutual funds are, the various types available, and how each category can fit different investment strategies. This foundational knowledge will empower you to make informed decisions as you embark on your investment journey. Definition of mutual funds. A mutual fund is a pooled investment vehicle that aggregates capital from numerous investors to invest in a diversified portfolio of stocks, bonds, or other securities. Managed by experienced professionals, mutual funds aim to provide investors with a simplified way to participate in the financial markets without needing extensive knowledge or experience. Categories of mutual funds. Equity mutual funds. These funds primarily invest in stocks, aiming for capital appreciation over time. Given their focus on equities, they offer the potential for higher returns, but also carry a higher level of risk and volatility. They are suitable for investors with a long-term investment horizon, looking to grow their wealth. Debt mutual funds. Debt funds invest in fixed-income securities, such as government bonds or corporate debentures, focusing on providing steady income and lowering risk. These funds are ideal for conservative investors seeking stability and regular income with lower volatility than equity funds. Hybrid mutual funds. Hybrid funds combine investments in both equity and debt, providing a balanced approach to risk and return. This category allows investors to benefit from the growth potential of stocks while still enjoying the stability offered by bonds, making them suitable for those seeking a moderate risk profile. Index funds. Index funds aim to replicate the performance of a specific market index, such as the S&P 500, etc. This passive investment strategy eliminates the need for active management and typically results in lower expense ratios, making it a cost-effective option for investors seeking broad market exposure. Sectoral funds. These funds focus on specific sectors of the economy, such as technology, healthcare, or real estate. While offering the potential for high returns during a sector's growth phase, they also come with higher risk due to their concentrated exposure. Investors interested in particular industries may find sectoral funds appealing. Thank you for joining us in this first episode of Mastering Mutual Funds, Understanding the Basics. Today we've laid the foundation for your investment journey by explaining what mutual funds are and exploring their various categories. With this knowledge, you're now equipped to start navigating the world of mutual funds with confidence. If you found this video helpful and want to continue enhancing your investment knowledge, make sure to subscribe to our channel and hit the notification bell so you don't miss any updates. Stay tuned for our next episode. Thank you for watching and happy investing.